Hi everyone. In today's video, we will learn three very important concepts in stock market, and you need to understand this to analyze any company's fundamentals and their performance. So the first one is book value, second is market value, and third is face value. So let's try to understand what does these three means. Before I tell you about book value, let's answer a very simple question. If tomorrow Titan goes bankrupt, what do you think how much money will be recovered after liquidation? Let me know if you have any guesses in the comment section. Depends upon the market value of shares, or does it depend upon how rich the promoters are, like Mr. Rakesh Jhunjhunwala, or does it depend upon the book value of shares, or does it depend upon the face value of Titan shares? Now the answer would be book value of Titan shares. So if you look at screener.in, Titan has a book value of 87.6 rupees, while its market price is 2462 rupees. So you can clearly see that there is a huge difference between book value and current price. Even though the shares of Titan are priced at 2462 rupees, if the company goes bankrupt, you are entitled to 87.6 rupees only. 87.6 rupees is the real worth of a share of Titan backed by real assets. Book value is based on real assets like the shops which Titan own, the factories which Titan own, and even the gold which Titan owns. But the current price or the market price is essentially based on perception or the perceived value of Titan shares. Hence, if the company goes bankrupt, you cannot recover the perceived value. You can only recover the amount which is backed by real assets which can be sold. I want you to take this information with a pinch of salt, because in real world situation is very nasty and retail investors often end up getting nothing if a company goes bankrupt. It's often the creditors, the government, and the suppliers get their dues, and we as retail investors always end up as losers. Hence, it is very important to understand book value of a company. And you can read these articles also that all the companies which has gone to NCLT so far, it's the retail investors who are the biggest losers. Now let's try to understand maths behind book value. But before I do that, let me tell you, book value of a company and book value of a share are different things, though they are very closely related. So let's try to understand book value of a company through ITC stock. Book value of a company is equal to total assets minus total liabilities. Now if you look at the balance sheet of ITC, you can see the total assets is 74,507 crores. So let's put this number into the formula. Total liabilities of a company is sum of borrowings plus other liabilities. Again, if you go to balance sheet of ITC, you can see the borrowings of 269 crores and other liabilities 13,339 crores. Borrowings and liabilities are the money which ITC owns to its creditors, and it has to pay back with interest. So if you plug these numbers, we get 60,889 crores as we get the book value of ITC. Now let's try to understand what is book value of share of ITC. Book value of a share is equal to equity capital divided by total number of shares. If you go back to balance sheet of ITC, you can see the share capital as 1232 crores and reserves as 59,667 crores. So if you add these two, you get the total equity capital of ITC. This is the money which is readily available to ITC to meet any bad situation or pay back its creditors and suppliers. And the total number of issued shares are 1232 crores. So if you plug these two numbers in the formula, you get 49.4 rupees per share. So the book value of a share of ITC is 49.4 rupees. Now remember, I told you that book value of a share and book value of a company are very closely related. So if you multiply 49.4 into total number of shares, you can get the book value of the company. So all you need to do is multiply 49.4 into 1232 crores, which is the total number of shares. You can interpret in the sense that if ITC goes bankrupt, this is the value which can be recovered after selling their factories, their securities, and everything which ITC owns, and you as a shareholder is entitled for 49.4 rupees per share in ideal world. But like I said, the reality is different, and this is how the market works. Now the next very important concept is market value. Now market value has no formula. No one in this world can predict market price of a stock because it is based on on perception, growth outlook, emotions, news, and whatnot. It is very rarely based on actual performance of the company. So there is no formula which can define the market value of a share. It is just a number used for trading on exchanges. Real meaning hides within the fundamentals of the company. The third very important concept is face value of a stock. Now, face value is equal to share capital divided by total number of shares. If you look at the balance sheet of ITC, the share capital is 1232 crore rupees and the total number of issued shares is 1232 crores. If you plug these two numbers, you get face value of 1. Now you should understand that face value is largely symbolic. It has no real meaning but is useful as dividends might be expressed in percentage of face value. Now if you have understood the concept of book value, market value and face value of stock, let's test our knowledge. Let me know in the comment section if you have got them right. So the market value helps you to understand the perceived value of a stock. Book value is based on accounting, while the face value is just a notional value used during dividends splits. Hope you have liked the video. Let me know in the comment section if you have any question. Thank you.